I'm Cathy Yang, your intel on the Philippine markets and the economy. In the headlines, President Marcos says he might seek special powers to temporarily lower the excise tax on petroleum products as global oil prices soar amid the Middle East conflict. The government assures the Philippines has sufficient oil supply, but urged cutting back on energy consumption. Phil Oil Group says they're closely monitoring market prices. Ariel Tionco, Phil Oil Group president, joins us live. And South Korean President Lee Jae-myung is in Manila for a two-day state visit, reaffirming bilateral ties to the Philippines. Brent crude has topped $80 per barrel, with oil markets on edge as the Middle East conflict shows no signs of ending. The international benchmark is now trading at $81.96 per barrel, up nearly 0.7%. Brent has now risen 15% over the past three sessions, its biggest three-day percentage surge since the onset of the Russia-Ukraine war. West Texas Intermediate sitting at nearly $75 a barrel, rising by over 0.5%. As for Dubai crude, it skyrocketed on Monday's trading by nearly 12% to settle at $76.53 per barrel. Analysts at ANZ warn that a prolonged Middle East conflict will have greater impact on oil markets, and the prospect of a global oil crisis may hit the Philippines harder than its neighboring countries. ING think tank says in a commentary, the country tends to see a stronger inflation hit since oil prices are more market-driven and subsidies limited. The International Monetary Fund says the impact of the Mideast conflict to the global economy will depend on its duration and damage to infrastructure in the region. Before the turmoil, the IMF had predicted solid global GDP growth of 3.3% in 2026. IMF First Deputy Managing Director Dan Katz expects central banks to be cautious and respond when needed. Meantime, Iranian clerics are set to name the successor of the late Supreme Leader, Ayatollah Ali Khamenei, who was killed by airstrikes on Saturday. U.S. President Donald Trump admits that Iran's new leader may be, quote, as bad as his predecessors.
I guess the worst case would be we do this and then somebody takes over who's as bad as the previous person, right? That could happen. We don't want that to happen. That would probably be the worst. Well, most of the people we had in mind are dead. So, we had some in mind from that group that is dead. And now we have another group, they may be dead also. So I guess you have a third wave coming in. Pretty soon we're not going to know anybody.
Iran is escalating its attacks in Gulf nations. On Tuesday, a suspected Iranian drone struck the parking lot of a U.S. consulate in Dubai. Israel has announced it had begun a broad wave of strikes against Iran's launch sites, aerial defense systems, and infrastructure. The Red Crescent Society says the death toll in Iran has already climbed to 787. Here at home, President Ferdinand Marcos Jr. says he is studying a proposal to reduce excise taxes on petroleum products as global oil prices continue to climb amid the Middle East conflict. Marcos said he will ask Congress for authority to lower fuel excise taxes, but only if Dubai crude exceeds $80 per barrel. He clarified that the move would be temporary and will not take effect unless that threshold is reached.
The leaders in both the House and in the Senate to maybe this is not yet a sure thing, but this is something that we are discussing, and it could be helpful, is to give me the president the authority to reduce excise tax on petroleum products should Dubai crude exceed $80 per barrel.
Marcos also assured the public that local oil supply remains sufficient. That was echoed by Finance Secretary Frederick Go, saying current reserves are equivalent to about 50 to 60 days of national demand. To ease the burden on consumers, he said energy officials have been directed to work with oil firms to stagger pump price adjustments. On Tuesday, gasoline prices rose by nearly 2 pesos per liter, while diesel went up by 1 peso and 20 centavos. DOE Oil Industry Management Bureau Director Rino Abad said it is too early to speculate on a possible 10 peso hike in fuel prices as global prices remain highly volatile.
Tingnan lang natin muna sa price kasi masyadong volatile yan. Tingnan na lang natin hanggang Friday. At ngayong araw may pag-uusapan din naman ng Department of Energy at mga oil companies kung paano gagawin ang mas mababa posible yung mga staggered implementation ng price para hindi ho mabigat sa ating mga kababayan.
For her part, Energy Secretary Sharon Garin also echoed assurances of adequate supplies, saying current reserves could last around 60 days. Still, she urged the public to practice fuel and electricity conservation as the global situation remains uncertain.
There are ways to save fuel when you're driving a car. On the electricity side, there's ways also to be efficient in the usage of electricity. So we'll keep our campaign on that kasi we don't know how long this thing will go on. It's not just a passing storm. We need to brace for that, and that's why the habit of conserving fuel and electricity should already be there.
The peso has sunk further against the U.S. dollar as the Middle East conflict drives up oil prices. The peso weakened yesterday by 23.5 centavos to close at 58.435 against the greenback. The local unit opens this Wednesday a tad weaker, continuing those declines at 58.50 to the dollar. The immediate one-month major resistance is between 58.50 and 58.70, says Mike Ricafort of RCBC, adding that 59 is the psychological mark. The peso recorded its weakest last January 20 at 59.50 to the dollar. Our guest today oversees fuel supply, pricing, and risk management. And at a time when Middle East tensions, rising freight costs, and the prospect of sustained oil price hikes are putting intense pressure on Philippine energy security and inflation. With us now for more is Ariel Tionco, president of Phil Oil Group. It's good having you here, Ariel. Welcome
Hi, Cathy.
to the program.
Good morning.
Good morning. So how's the market price looking so far on day 5 of the escalations?
Yes, we've seen the market to be very volatile for the past 2 days. We were looking at MOPS as our reference for pricing, and we've seen it climb consecutively the past 2 days, both for gas oil and MOGAS. So we've seen an increase of roughly $25 per barrel for the past 2 days for gas oil and around $15 per barrel for MOGAS.
Okay, so how does that translate then to what you see as a projected 30% increase? This is what you said in your press statement about 72 hours ago. Where are we in that range of 30% of an increase?
So we're actually within the range of the 20 to 30% that we've seen. But of course, as we all know, there's always this knee-jerk reaction. So we'll wait and see throughout the week on how the movements continue, and then we'll see towards the end of the week how it will unfold.
So it's likely that we would punch up beyond 30% of an increase?
I hope not, but as you've mentioned earlier as well, we don't know how long this will last, and the longer that it takes for this to settle, I think the bigger the impact will be on everyone, particularly for us here in the Philippines.
And you've been having meetings with the Department of Energy, and that came through first thing Monday, and that you have discussed the possibility of staggering the price hikes.
Yes.
If and when they happen from next week.
Yes.
What is the update on that discussion?
Well, there's going to be a meeting on that one today, actually. Because, of course, everyone wants to caution the impact on the consuming public. And, of course, all of us stakeholders need to adjust with the current situation that we're in. Just like what was mentioned earlier as well. The government will pitch in, the oil companies as an industry should also help. And, of course, the consumer, are reducing on the consumption and conservation with this critical situation that we're in.
Well, what would be maybe say, comfortable recommendation for an oil trading company, for Phil Oil? What would you put on the table in terms of executing a staggered price increase?
Well, actually, the structures that we have in place will allow us to be able to mitigate some of the impact. But of course, we have to look at the cost structure in itself. The key component there has, of course, the increase of the product. But we have to be cost effective. Of course, the prices in the end will also be relative to our competitors in the market, right? So we have to be cost effective in bringing in the product, making sure that we are efficient. And then in terms of pricing, of course, we do hedging and all of those formulas that are available for us with our various trade suppliers within the region as well. So it gives us the flexibility. But what's most important, I think, is for us to be able to bring in the physical product, and then the remedies, we could see how we can move forward with that.
What do you think is the possible range of a price increase that would be working on by the end of this week?
It's hard to really tell for now, but because we only have 2 days. But we'll see how we can reflect it on a staggered basis by next week. I don't want to really speculate on the number because, as I've said, it's quite volatile. But of course, we know what's triggering this. No? In the end, what we're more concerned of is the finished product rather than the crude, because most of the industry players in the Philippines are generally bringing in finished product. There's only one who's refining products and bringing in crude. That's why our reference has always been Minoplatz as our index in terms of the prices. Of course, it has a strong correlation with the movement of Brent oil.
Right. And in terms of a Phil Oil Group, if you do indeed agree to staggered price increases, what can we expect? Is it over a couple of weeks? Maybe give us an idea what the scenario will look like.
It will depend on the discussion today and, of course, the level of increase that will be implemented by next week, meaning at the end of this week, we will see an average price, which is a spread from what we have the previous week, last week, and then we'll see how it will pan out in terms of the implementation, because to the degree of the amount, it has to be as well agreed amongst the stakeholders.
And given your cost structure, specifically for Phil Oil, is it really 100% of a pass-on cost, or are you taking some?
Well, just like what I've said earlier, we have to be cost effective in our cost structure. So we have to find ways where we can reduce, of course, the cost as much as possible, so that we can help as well and do our share in cushioning the impact to the stakeholders and the consuming public as well.
So what other options do you have? I mean, are you actively hedging? Or
Yes,
are you already considering other alternate suppliers?
We are hedging, and we work closely with our suppliers within the region as well for their inputs as well and how they see things. So that gives us also a better perspective on how to move forward as well, together with them as our partners.
When the president says, try to conserve energy, is that going to help at all?
Of course. To lessen the spending on purchasing or acquiring energy resource, if we consume less, then we would need less, and then of course it lessens the strain on our financial institutions as well, purchasing products which are cost higher.
But in terms of inventory, I know that you said you have sufficient inventory,
Yes.
but what are the metrics like? I mean, how many months or maybe days can you commit for sufficient cover?
Well, actually we have sufficient cover because we have sufficient logistics facilities nationwide. We have import terminals and secondary terminals which are well stocked, well replenished, and of course we always program to cover our monthly requirements well ahead of time. So it's always like N+1, N+2. No? We nominate already to our suppliers the definitive dates of arrivals of our imports, making sure that we don't run out of products, and these are all in place already. So we're quite confident with that one.
What about for the suspension of the excise tax on fuel? What is that going to do for the industry?
Well, the suspension would actually help because at the end of the day, for diesel, the excise tax is around 10 pesos per liter, and for gasoline, it's sorry, it's the other way around. I stand corrected. For diesel, it's 6 pesos, and for gasoline, it's 10 pesos per liter. So that's the immediate impact if this will be suspended.
All right, just one more question. In terms of stakeholders, you're not just the only industry that's going to be impacted, but a lot of others.
Yes.
And industries, businesses, the business sector is already saying it's an inflationary shock. If there's one policy measure that you would recommend that the government do at this point, what would it be from the perspective of the fuel oil business?
Well, actually, that's a good move if we reduce the excise taxes. And then again, to really look into the cost components which are bringing the prices up, where areas where we can adjust and we can be flexible. Probably that's the area where we can look at to tweak it so that we adjust immediately with the current situation.
All right, well, good luck on that meeting
Thank
later
you.
on. And keep us up to speed on what happens next.
Thank you very much for having
so
us.
much
Thank you
for joining us. Ariel Tionco of Phil Oil Group. And you're watching Money Talks. Coming right up, the Philippines and the Republic of Korea signed 10 agreements aimed at deepening cooperation across key sectors and growing a single idea of Comfort Filipino into a portfolio of nearly 80 restaurants. A conversation with the Moment Group co-founder, Abba Napa. Keep it here on One News. Welcome back to Money Talks. I'm Cathy Yang. The Philippines and the Republic of Korea signed 10 agreements aimed at deepening cooperation across key sectors. President Bongbong Marcos and South Korean President Lee Jae-myung witnessed the exchange of memoranda of understanding during a ceremony at Malacanang on Tuesday. The agreements cover defense procurement, veterans affairs, agriculture, trade and investment, digital cooperation, education, culture, and police. Collaboration, Marcos says the deals will strengthen the Philippines-Korea strategic partnership, which was elevated in 2024 to boost cooperation in areas of shared priority. And checking in on the market, stock futures are trading near the flat line in after-hours trading as investors monitor how the Mideast conflict will affect oil prices, which may impact inflation and future monetary decisions. The Dow, the S&P, and the Nasdaq are all down by about 0.1% each. Asian markets extending their deep sell-off at the onset of Wednesday's trading. South Korea's Kospi sinks by 3.8%, Japan's Nikkei 225 plummets by nearly 2.5%, and Australia's ASX 200 tumbles by 1.5%. It was a volatile session for U.S. equities Tuesday. The markets found their footing in midday trading after President Trump ordered to provide insurance for tankers passing through the Strait of Hormuz. Still, the S&P 500 and the Nasdaq both fell by about 1% each, and the Dow declined by 0.8%. Asian markets also took a beating yesterday as the region is more vulnerable to Mideast energy supply disruptions. The Kospi sank by over 7%, its biggest one-day drop in over a year. The Nikkei 225 tumbled by over 3%, and the ASX 200 and Hong Kong's Hang Seng slid by over 1% each. The U.S. 10-year Treasury yields went little changed at 4.056%, and gold prices settled at $5,107 per ounce. Quick check on our own markets. See how the PSCI has opened this Wednesday, lower by over 0.25%, 6,428. Bargain hunting activities put an end to the stock market's recent bleeding due to the Middle East conflict. The local bourse rose yesterday by nearly 1/3%, with the sectoral gauges all in the red except for services. As for the Philippine peso, it opens today a tad weaker, 58.50 to the dollar. The peso slid further yesterday to settle at 58.435 against the greenback, driven by inflation concerns brought about by the Mideast conflict. And the 10-year government bond yields ticked up to 6.058%. And in corporate news, listed oil refiner Petron Corporation reported an 84% jump in net income to over 15 billion pesos in 2025. The company said this was driven by stronger domestic sales, improved refinery productivity, and lower costs. Petron President and CEO Ramon Ang said the company delivered growth despite market volatility, adding it will continue to strengthen its supply chain and expand its footprints. She is the co-founder of the Moment Group, the homegrown restaurant company behind brands such as Manam, Uma, 8 Cuts, Bo Cookies, and Michelin-recognized Hayop in Singapore. Now, with a portfolio of nearly 80 restaurants, she and her partners now navigate tough headwinds, from a slower-growing economy to potentially faster inflation stoked by higher oil. With us now for more is Moment Group co-founder Abba Napa. It's good seeing you, Abba, and welcome to the program.
Thank you, Cathy. I'm very happy to be here and talk about food and the dining scene.
Indeed, food are really a nice go-to. And congratulations, a belated congratulations to the Michelin recognitions. 2025 was a milestone year, would you say, for Moment Group?
No, it was. Thank you very much.
How is 2026 looking on the ground for you and your nearly 80 restaurants?
Yes, I think we come into 2026 in a steady state. You know, we're very stable, I believe. In the 14 years that we've been in the industry, albeit it's a short history, we've seen same shop performance metrics never retreat, never reverse. We're always growing year on year. And I think that speaks to the brands that we've created being relevant to the Filipino diner. And so we approach 2026 despite the current headwinds, despite the volatility globally right now. We approach it with, I would say, a heightened sense of discipline more than any kind of apprehension.
The Middle
At
East,
least at the moment.
Yeah, at
Yes,
the moment,
at
as
the
Moment
moment.
Group would say.
Yes.
The Middle
No pun
East
intended.
conflict, yes, is not a geopolitical concern, but really something of an economic concern, an economic shock that we all face, given the
Definitely.
prospect of higher oil.
Yes.
And that takes us down to costs. So
Yes,
if
definitely.
we break that down to how you're re-strategizing around the prospect of possibly more expensive raw materials,
Yes.
what is Moment Group doing right now to prepare for the worst?
So I think that it depends on, I think a business model is resilient also depending on your perspective. My partners and I have always taken a very long view on Moment and our portfolio of brands that we've created and our industry in general. And when you take a look at it that way, you don't immediately take a look at your cost centers and look at protecting the margins of today. You also take a look at basically investing those short-term margins for your long-term interests. So at the moment, we're holding steady. We're trying to understand if any economic pressures with regards to input costs or maybe even consumer spending behavior will compress margins for a extended period, and from there we'll make moves.
When you say hold steady, does that mean putting on hold the launch mode that you've been in and just sweating the assets and making sure that everything works out, especially as you've expanded in Singapore and Cebu?
Yes. So I personally believe that when you're creating a organization and a business that you believe is going to be evergreen, and for us that means creating a brand and an organization that is going to outlast us as founders and be something multi-generational, you should not freeze capital allocation in uncertain times. You should just become, I would think, more precise and probably more disciplined about it.
And precise and discipline would come in the form of pricing, as diners presumably might want to hold back or might trade down given the prospect of higher oil. Everything's going to just be more expensive, and food may be discretionary or maybe even premium food.
Yes.
How are you now strategizing with your co-founders, your 2 other co-founders? What are the discussions like on the table, and how is it going to change as we see prices go up?
So I have a unique perspective on dining and food and F&B. I believe, and we believe, my partners and I, Eliza and John, believe that in happy times or sad times or tough times, the diner, the consumer, still actively seeks out pleasure. And I think that's that's a hard lesson we learned during the pandemic. And I believe that dining and F&B hospitality, it sits at this really nice intersection between pleasurable and still financially rational during uncertain times. And I think that if you have created relevant brands that can deliver a compelling value proposition, even though diners are being more discerning about when they spend, when they indeed choose to spend deliberately, you will still be on top of their minds.
Are you going to raise prices at some point?
I think the question of raising prices is really dependent on the intensity of the pressures that are coming our way, whether that would be pressures on the top line with consumer spending behavior changing or input costs changing. And also it depends on the length that those pressures are going to extend and impact us. But I personally believe that what's really important is that at certain points in time, especially uncertain times, you need to protect your long-term interests, and sometimes investing your short-term margins by not just protecting your not protecting your margins, but protecting the trust and relationship with your consumers is more important. So as of today, we are not looking at increasing prices because of external pressures.
We have about a minute to go, and I wanted to reference COVID-19 because that really knocked down the restaurant industry, and you just held in there. What sort of lessons can you draw from what appears to be the most difficult point in your 14-year history as restaurateurs?
I think that what we learned was it was important to lean in to the fact that Eli, John, and I really have a long view on our business, our portfolio of brands, and our industry, which is the Philippine dining scene. And when you have a long view on things, you don't just look at making decisions to protect quarterly optics or today's revenue and margins. You really take a look at investing your short-term margins and protecting your long-term gains. And we did that during the pandemic. We did not instinctively cut first. We instinctively looked to do what we do, I guess, most naturally, which is to create. We went back to the drawing board. We understood where consumer behavior was shifting, and we tried to create products and brands and services that met those evolving needs and wants. And I think we came out of that much stronger. And I think that's the philosophy we'll take into any other situation that may come our way in the future.
All right, so at the moment, you're holding the line there. Thank you so much. And all
Thank
the
you so
best
much.
this year for
Thank you,
2026.
Cathy. Thank you for having me.
You're most welcome. Abba Napa of The Moment Group. And if you didn't catch it, Luneta Park turned into a sky-watching hub Tuesday night as crowds gathered for a total lunar eclipse, or the so-called blood moon. Look at them all. Look up. Led by the Philippine Astronomical Society, more than 1,000 people lined up with telescopes to watch the moon glow copper red at around 7 p.m. during totality. Astronomers say the reddish color appears when sunlight filters through Earth's atmosphere and bends toward the moon. The eclipse wrap ended before 10 p.m. with the next total lunar eclipse expected on New Year's Eve in 2027. Hope you took good pictures if you saw it. That is it for Money Talks. I'm Cathy Yang. Catch us again tomorrow at 9:30 a.m. Kapatid, we are One News, all sides, all the time. Have a great day ahead.